Hello and good afternoon, everyone. We welcome you all to today's live session. We will be having discussion about the fundamental analysis and how it can help you to make a smart investor. We have been talking about fundamental analysis or not, but today we will talk about that in very detail. What are the level of contents we are having, and from financial statement to conclusion we will be coming to our analysis. Now now I am Aditya Kumar Shah, and I am thrilled to be hosting this session for Dolphin Markets. On behalf of Dolphin Markets, we provide you with the various recommendation, with the various analysis we have. Basically, I specialize in forex, foreign exchange trading, and the stock trading, where we will come up with forex trading. But before, you should be learning more about stocks, and then we can switch to the forex. So for that, I bear brings a lot of experience in the financial market, where I have dealt with equity advisory, portfolio management, and market analysis to the platform. Talking about my background and expertise over my career, I had the privilege of managing portfolio worth over 150 crore INR, delivering compounded returns of 60 to 70% for my clients. My expertise lies in creating data-driven strategies. Hi, Raptor. I hope you are good. So my strategies expertise lies in the creating data-driven strategies with a strong focus on fundamental analysis. And in the third live session, we do with more of a fundamental analysis. This include an review in-depth review of financial statement, where we go for the balance sheet, we go for the cash flow, we go for the income statements, right? Then it is combined with the industry peer analysis, peer comparison, valuation matrices. We have to look, the most importantly, we have to identify what are its earning based on the valuation and how it can perform. The economic analysis, the SWOT analysis, strength, weakness, opportunities, and threat analysis, and the actionable insights of what changes can enhance a company performances. All this culminates in well-rounded investment advice to help make clients informed decision. What is the purpose of this session? In last session, what we do basically, we perform the fundamental analysis techniques. Variously, we have been performing the different topics. Previously, we have covered the valuation, how to value a company, how numbers can be good for fundamental analysis. But today, we will cover the overall perspective, why fundamental analysis plays an important role. We will just guide to company and asset valuation, right? So it will be a basic, but it is very important for you to understanding. We don't go advanced, that most of our clients miss out. We'll be just going for the basics. So for beginners who are just starting in the market, or for intermediaries, for to those who want to understand the market and its working, and how fundamental analysis can be done, how they can master the fundamental analysis, we will be dealing with that. So we have the title, the power of fundamental analysis in building strong investment strategy. We will be going for that. So just remember, be active, be interactive. So you have to be active also in the live session and be interactive also. So we will be discussing more fundamental analysis. But before that, let's have a performance check as the market is closed. So what are the performances our stock have done till now? So we have in the morning session, we have explained about the average prices, whatever the averages we have made here. It is very colorful as of now. Just look, we have made our stock in one color, like Hindustan exploration is been done in red color, so that whatever entries we have took, it has been you can identify it by one color. Just looking into the red, you will be identified. We have taken four position in Hindustan oil expression, and it is similar for all the stock. If we have taken one entry, it will be in black and white in a standard Excel format. But if we have taken multiple entries, the color has been changed, and we are able to see more of a entries in the same color. So So to remove any confusion and to miss out anything, so you don't miss out anything, we have provided this uh, so that you can able to understand. And also we have provided you with the average price of the stock. So whenever the prices are coming at the average, because prices we have taken multiple entries because the stocks have fallen a bit. So whenever the prices are coming to the above level at the average price, so you will be able to safeguard your capital if you don't want to continue in it, right? If you want to save your money, you will be just able to exit at that position and make a smart exit, like without any loss or without any person. But if you want the profit, you just stick to our position, you will be surely getting the profitability, because whatever research we provide with the backed by good research, right? So these are the things I want to tell. Until now, the performances, if you look, we have provided you with the staggering performance return, 232% in just last 3 months. And it has been executed, just 37 trades till date has been executed, and we have been able to generate the profitability of 232% profitability. So how we are generating this profitability? Any guesses, guys? How we are able to generate the profitability? Just let me know how you are able to generate this profitability. We are generating this profitability by our strong research, right? Whatever stocks we provide are backed by a strong research. We perform the fundamental analysis, we perform the technical analysis, we view the 360 degree, we view the stock from 360-degree view and provide you with the recommendation. It's not that we are coming up with quantity advice. A lot of advices are there which are in quantity, right? We can provide 4 or 5 stocks in a day, but if it doesn't work, your portfolio doesn't grow, there's no benefit of investing in that 4 or 5 stock, right? Your money will be just stuck in the portfolio and you won't be able to make any profit from the market. Most importantly, we are here in the market to make profit, we are not here to make any losses. So just remember that whatever recommendation we are providing, we are just providing to make you more and more profit and gain consistently in the market. We are not here to make any losses. Is there anyone who wants to make, who are here in the market to make losses? I guess the answer for all of the viewers will be no, because we are here in the market only to make profitability. We are not here to make losses, right? We are here for profit. So just remember, we are here in the market to make profitability, not for the losses. That's the reason we are providing you with the consistent gain, so you are able to and gain consistently and make the quick money, because we are here in the market to make quick money. So just remember that if you are following our recommendation, our calls entry, you would be profitable 232% till there. Even if you have missed till now, just join us in the live session and start making the quick money. The making money is not hard for us, right? The making money is not hard for us. It's just the making money in the stock market is not hard for you also, because you are just lacking the right advice, right? You're just lacking the right advice. To get the right advice, right, you have to come here in the live streaming and start getting profitable, right? And start getting profit, you will be a profitable trader. So with this, I want to let you know one more thing. Starting from the January, we will be switching to the VIP mode, where we will be dealing with clients only who are serious in making money. So if you are not serious in making money, we won't be providing you with the live streaming session. But if you are serious in making money, we welcome each and everyone who are serious in the market and who wants to deal seriously in the market. For them, our doors are always open, and we can make some quick amount of money in the market. Just remember that. So this was our about our profit taking strategy. If we look at our holding, just we will go through the holding and we will be back with the fundamental analysis. So if we look at our holding, we have seen our holding has performed our holding has performed very good from many days, but for few days as of now, our holdings are stuck as of now, right? For few days, our holdings are stuck, and we are not able to make an exit from few days. But that's not the negativity. We are seeing there is a constant fall in the nifty, constant uncertainties in the market regarding that. We have seen some falls coming up, right? For many of the stocks, still we are able to deliver you with the staggering returns. Even there was a fall in nifty, we are able to see, we are able to provide you with the staggering returns. And most, even in this falling market, nifty has taken a dip of 1.35%. Our four of the stocks still remain positive. So look at the stocks we are providing, right? The recommendation we are coming up with a great advice. It's not just that we are giving you the vague any recommendation, or we are coming with a good research back analysis. So looking at the current status, we have their plastic, which have gained today 1.63% and have closed at 292.85. If you look at the Kirti Industries India Limited, we have discussed about this fundamental, right? We have discussed about this fundamental, yeah, in the afternoon session. So Kriti Industries, they have closed 1.17% at 168.78, and Hindustan Oil Expression have closed at 194.66, up by 0.59%. Muthoot Finance Limited has closed 190.02, up by 0.23%. And for rest of the stocks have ended negative. Poonawalla is negative by 1.2%. IP Ring is negative by 2.10%. So you can look, the mostly the producer manufacturing industries has been negative, and the finance sector has been mixed. Muthoot FinCorp is positive, but the Poonawalla FinCorp is negative. So mostly finance sector has fallen a bit, like from Muthoot to Poonawalla. There were some uncertainties because the Fed rate is going to come out, and there is an expectation that the Fed will cut its rate by 25 bps. So it will be a challenging to see how banks are performing and how banks are able to do that. So if we go to the news flow, so these are the news flow. Tesla stock rise on analyst optimism over driving potential. Fusion tourism appoints independent financial advisor. So the news are coming up. Stanley Morgan has raises price target on Corning to $48 from 39. So these are the news coming up very frequently as of now. So we will just look at it, the news format, right? It is, if we find the important news that is most important in it. So we will talk about global equities here. Global equities round up the market talk, right? So talking about, so if you look at the market overall, it has ended negative, and most of the markets globally also have ended negative. So looking at the global market, if we look, right, if we go to the Motilal side, we will be able to see the global market as well. So the Nifty 50 has ended negative 1.35%. The Nifty Bank is negative by 1.39%, and the Sensex is negative. So on an average, it is negative by 1.35 to 1.30%. India VIX is also a volatility index. Why we look after the VIX? VIX represents the volatility in any country. If the VIX keeps on increasing, so there will be volatility in Nifty stocks, that will be affecting the market sentiment a lot. There will be much more stocks who will be making good highs and good lows, but that create fears. We have seen many a times that when volatility increases, the market price of the nifty stocks keeps on decreasing. So volatility increases, the nifty goes down. Why? The volatility is very high, and there is a sense of fear among the investors to invest in their volatility. If you look at the world indices also, Nasdaq 100 is negative, right? S&P 500, UK market FTSE 100 is negative by 0.78%. CAC 40 is positive as of now. But overall, if we see, Nikkei Japan index is positive, Hang Seng is positive, but most of the European market, Australian, and the Indian market have ended negative as of now. So these are the things which have ended negative. So if you look at the indexes, most of the except Nifty Media, all the indices have ended negative for today. So we are seeing some uncertainties going on, and most of the stocks have ended negative. Now let's come to the fundamental analysis. Why we are doing the fundamental analysis, right? So we will go through a comprehensive guide to company and assets evaluation. So what will be the table of content? What will be the table of content? Table of content will be financial statements, cash flow. I will just zoom it if you are not able to see. Table of content will be financial statement, cash flow, dividend, risk management, central banks, quality management, company analysis, inflation, efficiency ratio, business model, competitive advantages, market approach, valuation ratio, conclusion. So we will just go through each and everything in detail, and we will look after many matrices, many contents, and just analyze how we are able to do with the fundamental analysis, and we are able to perform really well. Right, so let's just begin with the analysis. Financial statements. How we do the analysis of financial statement? We have to examine the balance sheet, the income statement, and the cash flow statement. Right, going through the financial statement, we can get the balance sheet, income statement, and the cash flow statement from the income statement, right? So we have to go through that. We have to analyze company assets, liabilities, revenue, and expenses. These assets and liabilities you can get in the income statement part, and revenue and expenses you are having, you can get in the balance sheet part, right? So revenue and, sorry, the assets and liabilities you will be getting in the balance sheet. So whatever the assets company have, whatever the liabilities company is having, you will be easily to get it in uh, the balance sheet part, okay? And the revenue and expenses part, whatever the revenue, expenses, net income, we will be able to get that in income statement. So we have to identify trends over time to evaluate financial health. So how can we identify trends among the financial statement? We have to look either the balance sheet is increasing or decreasing, the revenue is increasing or decreasing, right? So we have to identify the trend. I will take an example of any company, just right. Previously, we have identified Kriti Industries. I'll just take the example of that. So, how to identify a company? We have to identify by looking at the revenue. Just look, the revenue has kept or has increased a much, right? It has added 180 crore rupees in 2022 to 2023, but it has added a good amount of money here also, right? So we have around 130 crore. So right, so we have to look at the growth. The annual normal view is not preferable. We have to look at the growth also. So looking at the growth, we are seeing that the growth was 33.16% in 22 and 23, and in 23-24 it is around 18.21%. So we have to look consistently how is it maintaining to grow the balance sheet, right? So we have one question from the viewers that can financial statement help us in taking informed decision? It can help you taking an informed decision because it is a part of financial and fundamental analysis. We take it under consideration. It is one of the most important parameters, the financial statement parameters, to consider it in our investment. Suppose the industry is growing, right? When the industry is thriving, economy is growing, still the financial of a company is doubtful, and the revenue, the profitability are not clear, and it is decreasing year on year, so it is not a good sign. So from that only we will be able to know that company will be not doing good in coming future, right? If it keeps on increasing the liabilities, if it keeps on increasing the interest payment, for the loans which it has borrowed. So that makes doesn't make any sense to invest in that company. So balance sheet gives you the brief idea how company is performing, and the company is profitable on quarterly to quarterly, yearly to yearly. So that makes sense to invest in the market, and you will be gaining more insights into that. So I hope Raptor is clear about the statement analysis, right? How financial statement help us in taking informed trade decisions. So I have explained that to a very detail. So you can just look at it. It just so the industry debt to equity ratio for it has been higher, right? So this is example. We have to look if it's maintaining its growth as par with the industry or not, and the lower than current industry current ratio over the last 5 years. Current ratio has been 121.24% versus the industry average of 143.88%. So this was a lower than industry current ratio. Uh, Total equity, just look at the total liabilities have also kept increasing. So we have to look at the trend. The assets are increasing more than the liability or not, or the liabilities are increasing more than the assets. So by identifying their growth, right, the growth in terms of numbers also, and in terms of percentage also, if the percentage growth in liabilities is much more than the percentage growth in assets, you will be able to see that the liabilities will be taking over the asset in the long term, and it will be bad for the company in the long term. For those who are thinking to make an investment in the long term perspective for any stock, they have to see the assets are growing or not, and if they are able to reduce the liability consistently or not, right? So that's the most important thing to look at for the long term investment. You have to look at the trends and look how they are managing their assets, their profitability on year on year basis, so that you are be able to rest assured that your money will be growing in future. So coming to the cash flow, we have been identified with cash flow that whatever businesses we are running, right, whatever businesses we are running, is it able to generate cash flow or not, the cash is coming from the businesses or not. So that has to be identified in a businesses, right? So this was all about financial statements we have been learning about. I will just go through my presentation once again and explain the next. The cash flow, we have already talked about the cash flow. We have to focus on liquidity by analyzing operating, investing, and financing cash flow. So we have different cash flow. There is operating cash flow, which generates from the operations of a business, right? Whatever businesses we are doing, the cash is coming up or not, we have to look after that. The financing cash flow, we have to look whatever the businesses we have generated, the cash which we have generated, where we are financing them. Cash flow determines a company ability to sustain operations. So whatever operations we are running, the cash flow determines it ability. So businesses we are doing, so company cash flow is a good, right? Company is running its business at a very frequent rate, so that would be more beneficial for any company. The company positive cash flow is very important for any company to run the businesses, right? And we have talked the positive cash flow indicates financial strength also of a company. Dividend, if we talk about the dividend reflect profit distribution to shareholders. So what do you mean by dividend, right? A dividend, whenever a company makes any profit, so, and how you will get benefit from that? If you are a shareholder, suppose a company is making profit from that, so how you will get benefit from that? You will get the dividend on per share basis. I will explain you with an example how we'll get the profit. You will get the profit on the per share basis. I'll just look if we can add something. Yeah. So suppose we are having a profit of 20,000 rupees. If we are running a business, we are having a profit of 20,000 rupees, and we have how many partners? We have 10 partners in it. We have 10 shares. We have 10 partners and 10 shares in the businesses. So each partner have one share, right? Each partner have one share in it. So how this profit will be distributed? This profit which we have generated doesn't require any investing as of now. We want to distribute among the investors. So how it will be distributed? It will be distributed in the form of dividends. So in the form of dividends, right? So whoever's are the investors in the market in that company, it will be divided equally, considering the share number of shares they hold. So here we are seeing an example. Company have generated a profit of 20k, 20,000 rupees of profit have been generated, and there are 10 shareholders. Each shareholder is each shareholder is having a share of one share each. So the profit will be divided among 10 shareholders. So each shareholder will get 2k profit, 2k profit, right? 2k, each shareholder will get that. So this is the form of dividend. We see if the company is providing you with the consistent dividends, right? So it is a very good sign. Company is not hiding something. Company is not trying to manipulate his statement, because it is again and again giving you with the dividends, right? We have seen example of ITC, and many oil companies are there, ONGC, which provide dividends up to 10 to 15% of the 10 to 15% of their share price. So that's most important. If the company is providing you with a consistent dividend, right, that makes a very attractive investment for any investor, because company is dividing its dividend, and many of the people who require regular cash flow to maintain or sustain the lifestyle on daily day to day basis. Like if you have a large portfolio and if you are owing a dividend stock, you will be easily getting 10 to 15% of the stock, 10 to 15% of the money in your bank account without selling any of the stocks from your end. So it makes the dividend makes it very attractive, right? So here we have seen we have a profit for a company at 20k, and the 10 shareholders are there, or 10 shares have been there. So each shareholder will be getting 2k profit. So this is the simple meaning of dividend. We'll just remove it to remove the confusion, right? This is the simple form of dividend. So dividend reflect profit distribution to shareholders. Analyze the consistency and growth of payouts over time. Steady dividend signals company stability and interest confidence. So steady dividend signals company stability and investor confidence, right? So when the company is providing you with this steady dividends, it will be signaling stability and investor confidence. Now talking about the risk management, right? We have to evaluate how company mitigate operational, financial, and market risks. So these are the few things we have to evaluate how companies mitigate operational, financial, and market risks. We have to look at the techniques: diversification, hedging, compliance, and insurance. The strong risk management ensures sustainability and reliance. So we have to look after the risk management also. If we have a strong risk management, it will be known for reliance, right? Resilience. It will be able to maintain good growth, and the sustainability will be there. We have to evaluate how companies mitigate operational, financial, and market risks, right? So techniques are also important. Diversification is important, the hedging is important, and the compliance and insurance part is also important here. So we have to look how companies are operating, how they are managing their risks, how they are managing their financials, and how they are able to manage their market risks, right? So techniques also plays important role. We have to look the diversification is taking place or not, the hedging is taking place or not, compliance is there or not, and the insurance. If we don't have the insurance for a certain product or a company, right, if it fails to provide you with the returns, that would become more difficult, right? So strong risk management ensures sustainability and resilience. So we have to keep in mind that a strong risk management will be ensuring sustainability and reliance. Central banks understand how monetary policies influence industries. We have to understand how monetary policies are influencing. If you look at the central bank policies, Key policies include interest rate, inflation control, and money supply. Analyze the company adaptability to changing macroeconomic policies. So we'll just take an example how central banks affect the market. So we'll just go through one side, okay, and look into it. Central banks interest rate. So how central bank affects interest rate? The central bank, if you look at the Central Bank of United States, the Federal Reserve, the most important central bank is in the United States. The Fed Reserve is tasked with maintaining a certain level of stability within the country financial system. Specific tools are afforded to the Fed that allows for changes to board monetary policies intended to implement the government's planned fiscal policies. So these are the policies which we are having, right? Specific tools are afforded to the Fed that allows for changes to board monetary policies. So this include the management and oversight of production and distribution of nation currency. So what does the Fed decide? It decides that how many currencies that needs to be produced and how many currencies are needs to be distributed and it at what place. So that plays a very important role. In detail, if you understand, the Fed is creating the money and it is deciding where to invest that money, right? So whichever sector the money will be getting invested, that sector will be growing. So we have to monitor that also. And the promotion of economic and employment growth through implementation of changes to discount rate. The most influential economic tool the central bank under its control is the ability to increase or decrease the discount rate. Shifts in crucial interest rates have a drastic effect. So, what are the key takeaways? Fed sets a target interest at whichever banks lend to each other overnight in order to maintain reserve requirement that is known as Fed fund rate. Okay, the Fed is also set at a discount rate. Whenever I will explain you with an example. Whenever you require a funds, right? If the central bank is giving you with a good interest rate, you will be obviously going for the central bank investment and you will get the desired return, not the desired return, but the fixed return, which is very safe and it is in the form of dollars, right? And we know the dollars are the reserve currency. But if the Fed is kept on decreasing the interest rate, so what will be happening? We will be taking our money out from the system and will be investing elsewhere in the stocks, mutual funds, cryptos, and also these are the areas where the money will be rotating through. So it is very important to understand why Fed rates plays an important role. If we look at the current scenarios, also there has been many news regarding the Fed, right? Fed game plan on interest rate cut keeps Russia losing the battle against inflation. So these are all news related to Fed, which is affecting the market a lot. So we'll be back to our presentation. We have come to know how central banks plays a very important role through the Fed rate cuts, the interest rate cuts, and everything, right? So it includes interest rate, it includes inflation. If the inflation goes out of the hand, if the inflation is going out of the hand, that would be a main problem because when the inflation goes out of the hand, there will be excess supply of money coming into the system and it will be not be able to control by the government. We have seen in the countries like Philippines, right? Venezuela, many countries are there where the inflation has gone out of the hand. Zimbabwe and Venezuela are the great examples of it, and people are just carrying their money in the van and going to buy some goods. So is that a good sign? Because inflation have become out of control, so government have to look how they are able to manage the inflation in a proper way, right? And also the money supply which they have to look how they are able to manage it. Analyze the company's adaptability to changing macroeconomic policies. We have to look how we can analyze the company adaptability to changing macroeconomic policies, right? When the company keeps on adapting according to the macroeconomic policies. We have seen some countries in the, I think, in the Arab countries, especially, if you look, the good had been very great, right? The growth has been very great as of now because they have been adapting the system. For example, the Arab countries, specifically the UAE, United Arab Emirates, right? We have states like Dubai and Abu Dhabi and Saudi Arabia also. They are becoming crypto friendly. They are becoming forex friendly. They are providing tax free income on the forex, and even they are not charging anything for that. Just they want to come to their place and just stay and invest your money freely, and they won't be asking any tax from your end. So it is making adaptable to the current situation. They are not against anything, neither against crypto, neither against forex, which makes it a very friendly country to them. And when people will be coming here, they will be automatically seeing the growth, because when rich people comes to a place, they will make that place richer, right? So, talking about the quality management, what do you mean by quality management? System ensuring products and services quality are crucial. So, we have to understand that system, product and services which we are providing are of quality. Assess adherence to standards and customer satisfaction. We have to look whatever customers we are dealing with is having satisfaction or not. So most importantly, wherever we work, whatever we see, whatever the product we use for a company, we have to see we are having a customer satisfaction on our own or not. Suppose you want to invest in a Britannia or any FMCG product, so you just go to the market and have a taste of the product and ask yourself, am I getting the taste which I need for, right? So if you are getting the taste and the majority of the people are getting the taste the same way, you will be able to see you are making investment at the right place, right? So just have a look, whatever product you are investing, just have a look in your surrounding, is that product doing good or not? So high quality leads to better reliability and competitive edge. So high quality, if you have the high quality products, and it will live when it is led by the loyalty, it will be automatically promoted by your customers to other customers, and the other customers will come to buy your product and increase your product sale. So coming to the company analysis, if you look at the company analysis, what we can do a SWOT analysis. We talked about SWOT analysis a lot, right? What do you mean by SWOT analysis? SWOT analysis is just abbreviation of strength, weakness, opportunities, and threat. So whenever the businesses we are running, we have to look what are the strength it is having. Either it's financial or good, either the industry which is working have a good strength. Mainly the company strength. If you talk about the weaknesses, we have to look about its financial, either the revenue, profit, net income is going down or high, right? The margins is going good or not, the margins are at par with the industry average, or the margin is keeping on increasing or decreasing. We have to look on that. The opportunities, what do you mean by opportunities in any company? Opportunities means that that's specifically related to the sector. So if we look at the opportunity, we have to see if that sector is going to boom or not, the economy is going to boom or not, right? So that means opportunity. If you look at the threats, we have to see how threats are there in that industry. Is the industry facing any threat? Like if you look at the cigarettes company like ITC and many companies are there. I don't remember the name as of now, but specifically focusing on cigarettes or alcohol companies, they may face threats any point of time. They may face some ban in the states. We have seen in India they have faced bans. Few of the states like Gujarat and Bihar have banned the alcohol completely, and we don't are able to buy the alcohol in that states. So these are the threats which we are having in a few of the stocks. So just look how that industry is going to perform. If the company is doing the businesses in few of the states only, so that is very critical to assess, because if the states ban any product in that state, that will be all of the operations will be just shut down, and won't be able to gain any profit from the stock, and if that stock will keep falling and your all capital will be eroded. So just remember that. What we do next, we examine the market position, leadership, and competitive strategies. We have to look, the company is at the leadership position or at the mid or at the lower level, right? We will come to know about that only if we analyze the industry. We will come to know the company is big, small, or in mid cap by their market capitalization, right? If the market capitalization is more than 1 lakh, it will be a large cap stock, right? If the market capitalization is between 20,000 to 80,000, it will be a mid cap, and if the market capitalization is below 20,000, it will be a small cap stock. So company analysis identifies growth potential, right? We can identify the growth potential from the company analysis. If you have to look how the company is doing, the all of the SWOT analysis, right? The strength, we if you know the weaknesses of a businesses and how it can improve the weaknesses, the opportunities in the businesses, and whatever the threats are having, is it a serious threat or a normal threat, and can it overcome them, is there any possibility to overcome the threats and weaknesses, and then we will be able to assess more of it. If it is able to overcome these weaknesses and these threats, we will be doing much more better in any of the company, right? And the company will keep growing in terms of revenue, in terms of net income, in terms of profit. Coming to the inflation, inflation affects input cost, pricing power, and profitability. So inflation is affecting. How does inflation affect? We have come to know about the inflation, that inflation reduces your purchasing power on year basis. Why? For example, whatever the products you used to buy in $100 10 years back, are you able to buy that products in $100 now? The answer will be no, because the inflation is kept on increasing on 6 to 7% basis. Normally in India, we see the inflation keeps on increasing on 4 to 6% basis, right? So you are decreasing your money value as compared to previous year, and it will be decreasing more in coming years. Suppose you are holding 1 lakh rupees today, it will be not worth 1 lakh. You will be having 1 lakh, but the purchasing power of 1 lakh will be reduced next year, right? That's why we come and invest in the market, or it would have been very stagnant, the inflation would be not very high. That won't make any sense to invest in the market, right? The inflation is going on, if you and you want to beat that inflation and make some returns also, that's why we are coming to invest in the equity market. So inflation affects input cost, it affects pricing power, and it also affects profitability of a company. If a company is not maintaining its profitability, growing again and again, there will be some issues in the company as well. Companies with a strong pricing power perform well during inflation. So company who have a strong pricing power perform well during inflation. Which are those company which have a strong pricing power? The strong pricing power, we have companies like Apple, right? The Microsoft, the brand names are enough. The Nike in terms of shoes, the Apple in terms of phones. Even the inflation is growing, even the products are becoming expensive. The people will go and buy that product. Why? Because it has a strong pricing power. Assess inflation adaptability in operations and margins, right? We have to assess inflation in adaptability in operations and margins. So we have to look, the company which is generating profit is from operations and margin, it is adjusted with inflation, and how much profit, the actual profit is being generated if you adjust the inflation. If you look at the efficiency ratios, what do you mean by efficiency ratios? The efficiency simply means how efficient the company is able to perform to generate the profitability for a company. So we have a key ratios: inventory turnover, asset turnover, and receivables turnover. Right. Second one is measure resources utilization and operational efficiency. Third one is high efficiency increases profitability and competitiveness. So we have to look, when the efficiency is good, the management is taking some initiative and they are very active in investment, and the efficiency is very good for a company. right? People are very efficient to work, you'll automatically saying that the profitability growing, the competitiveness is also growing. The business model, talking about the business model, understand revenue generation, right? We have to understand the revenue generation, the sustainability, right? We have to understand the sustainability also, and we have to understand the scalability also. So we have to look how the business is generating the revenue, how it is trying to scale its business, and what is the sustainability model of a business, right? Analyze profitability, recurring revenue, and a unique value proposition. So we also have to analyze the profitability. What are the profit generation capacity a company is having from its revenue? If it is increasing its revenue and the company profitability is not increasing, that doesn't make any good investment opportunity. And if the profitability is also increasing, the revenue is also increasing, we will be considering as a good investment, because it is a profitable company, and side by side the revenue is also increasing. Thirdly, we have a strong business model supports long-term success. So if you have a strong business model, it will be for a long-term success, and you can invest for a long term. Looking at the competitive advantages, identify unique strengths like brand value, technology, or patents. So we talking about the competitive advantage. Just let me know what are the competitive advantages company available in the market in the comment section. I will wait for you. Let me know in the comment section what are the companies are there who have competitive advantages. Whatever their peers are doing, they doesn't care about that, and they make good amount of profit, and they are some big companies. Any guesses, guys? So I will let you know what are the companies who are making, who have a unique brand value. Example I have talked in the previous slide, but you don't remember, right? The examples are Apple company. So it have a strong brand value. Even the Android is kept on changing its price, increasing or decreasing their prices. It has such a brand value that the people will be who have used Apple or who want to tends to buy Apple will be going for the Apple product, right? The Apple iPhone product. So it has a strong brand value, right? And we have to look, the technology is also very unique. We use the technology in Apple apart iOS, which is not available in Android, and it is patent for Apple product only. The iOS features is only available for Apple products, and the Android are used by many of the phone companies, right? Or the patent. So that's the advantages Apple have, and it is growing a lot. Competitive advantages ensure market dominance and high margins. So we have seen the Apple product have a competitive advantage, which is one in a unique product, and the margins are also very high. Whenever they are selling their products, the margins will be high in that. Sustained advantages drive long-term growth. So there are some sustained advantages which drive long-term growth. Market approach, analyze industry trends, customer demand. So we have talked about competitive advantage. Now we will talk about the market approach. How we approach the market. Analyze industry trends. What industries are doing. Customer demand and competition. So these are also very important. We have to go in the market and understand the needs. Is this the industry trends going good or not, right? The customer, what are the demands from the customer? Are we able to provide the product based on the customer needs or not? And the competition, look at the competition, whatever industry the business is working, it is competitive or not, right? Understand external factors influencing performances. So you have to understand the external factors like GDP data, like inflation. Either it is able to affect the performances internally of a company or not. Market positioning determines company opportunities. So we have to look market positioning, which is determines company opportunities, right? Next, we come to the valuation ratios. Why valuation ratios? We have to look the companies overvalued or undervalued. So it is one of the important points in valuing a company, because at the end of the day, after doing and fundamental analysis, we have to know the company makes a smart investment or not for us by valuations. So the valuation ratios which we have, like P ratio, PB ratio, plays a very important role. So we have to use matrices like PE ratio, price to earning ratio, PB, the price to book ratio, EV by EBITDA, enterprise value by earning before interest, tax, and depreciation and amortization. So these are the full form of it which I have explained for a fair valuation. So just remember, what do you mean by P? P means price to earning ratio, right? So whatever the stock price we are having, we divide it by earning and we get the P ratio. The PV ratio, price to book value, and EV, what is the enterprise value of a stock divided by the interest, earning before interest and tax, depreciation and amortization. So what are the earnings before the interest, the tax rate, the depreciation and amortization? What is the earnings, right, for a fair valuation? Compare against industry benchmarks to identify undervalued stocks. So we have to compare it by the industry benchmark, the peers which it is having a competition in, and we have to identify undervalued stocks. So valuation, how valuation helps investors make informed decisions, right? So after analyzing each and everything in the valuations, the ratios of it, we will be coming to know, and if you analyze it with the industry peers, we will come to know it makes at a smart investment decision. And we have been seeing many investors are looking at the ratios and telling that it is overvalued or undervalued just by looking at the company profile and the ratios they have. Even if you search on the Google, most of these ratios are available. The PE EPS ratio are available. One more important thing is there, the EPS ratio, the earning per share ratio, which shows the earning on a per share basis. If you look at the conclusion, fundamental analysis is essential to evaluate company and assets, right? Fundamental analysis is essential to evaluate company and assets. Combining financial matrices, risk factors, and external conditions provide insights. A comprehensive approach leads to a well-informed decisions, well-informed investment decision. So fundamental analysis is essential to evaluate companies and assets too, right? That's why we are doing with the fundamental analysis and coming up to a well-rounded investment advice to each and every one of you. We have been combining financial matrices, risk factors, and external conditions provides insight. So we combine the financial matrices like the income statement, balance sheet, and the cash flow, and then come to the risk factors. Whatever the risk management we can do in a company for an investment, we look at the external conditions which can affect the market, like GDP, economic condition, data, Fed rates. These are the external conditions, and we provide you with the insights. A comprehensive approach leads to a well-informed investment decision. So, whatever the analysis we do, we have to be a very comprehensive. We have to be make a well-informed investment decision. So, this is the conclusion we are having for presentation. I will just say thank you for being in this live session and watching this presentation. Right. So I will just sum it up very quick. We have talked about fundamental analysis, comprehensive guide to company and assets evaluation. We have table of contents, right? We have talked about the financial statement, why we have to analyze balance sheet, income statements, and cash flow statement, where we do the assets, liabilities, and revenue and expenses, where we look for that, and we have to identify the trends among that. We go for cash flow, where we focus on the liquidity, the company is able to do well or not, right? We go for the dividend, which reflects the profit distribution to shareholders. So we go for the dividend. I have explained the dividend in very detail. If the company is providing you with a consistent dividend, it shows the efficiency in a company. Risk management, whenever you are investing in any stock or any company, you have to look at its risks, whatever the risks it can face. Either it can be operational, financial, or market risks, which can come from the external factors as well. The financial risks come from the income statement, the financial statements. If the company is manipulating anything in this financial, it is a very serious thing. Techniques, we have to look after the diversification, compliance, and insurance. If you look at the central bank, understand how we have to understand how monetary policies are affecting, are influencing industries. Key policies which include which included the interest rate, inflation control, and money supply. Quality management. This is one of the most important thing. We don't have the quantity management. We have the quality management. Why? Because the quality is very important for a company to maintain, and ensuring its product and services are crucial, right? It is able to meet the standard requirements. We then go for a company analysis, we do the SWOT analysis, we then go for the inflation. We have to check the pricing power of a consumer, it is increasing or decreasing, and according to that the consumer is able to perform well or not. We go for the efficiency. Why we go for the efficiency? We have to measure the profitability, efficiency, right? We have to go for businesses model, understand revenue generation, scalability, and sustainability. The competitive advantages, we have to identify unique strengths like brand value, technology, or patents. We have to go for market approach as well. The valuation, we have to use major matrices, and then we come to a conclusion of this presentation, right? We have been able to understand from the starting of the session that why fundamental analysis is very important to essentially evaluate company and assets, right? Combining all these financial matrices and risk factors and external conditions, we provide you with the investment advice. So these were the basics of fundamental analysis, which we are discussing a lot from many days. And and now we come to the end of our session. Stay tuned for next session. From tomorrow we'll be doing our next session, and stay tuned for the then. Happy investing, stay profitable.